right, welcome back for another session. So we have quite an interesting few weeks, I would say even few months developing in the whole market. We see some sideways action, but those sideways action are really sideways. Nothing, no deep pullbacks since we started to rise up. Way down here. At the beginning of the year, we started to go up. Then we doesn't look like we want to go back to test the bottoms. Yet to be seen. Yet to be seen. So let's start first by going through your any trades that you took, any lessons from those trades. Last week on Tuesday, we were having a short gap fill day. I think you took this trade, right? This pin is when you said you took a trade.
Yeah, right at the bottom of that, just right at that hammer, is when I took that trade to the upside.
Yeah, and then where was your stop?
Unfortunately, I had a pretty tight stop, so the next day, I got stopped out. So it was
So your stop was right below the pin bar, right below
no,
the
a
hammer.
little lower than that, but it is within that consolidation zone right there.
Yeah.
Yeah.
So yeah, that's why we talk a lot about stops, tight stops. Yeah, you have to look at one thing. Look down here where we talk about range. This 1.4 is the average range of each bar. So when you take that into consideration, like that's why I have these numbers here. If you don't take that into consideration, then you'll get, wiped out of your account because your stops are always too tight. And you can even go to a daily and you can see the daily range. When you took that trade on Tuesday, right, the daily range was $5. So tight stops, they don't mean 50-cent stops when the daily range is $5, right? Tight stop could be if the daily range is 505, you do your stop at 510. To me, that's a tight stop. And a regular stop is something like you go all the way down to close this gap. This is a wide stop, right? So if you don't want this wide stop, then what you need to do is go from that low point and then go down, go down $5.10, right? So this is what we said. So this is your tight stop to me. Anything inside here is asking for trouble. Because why? Because we go back to our daily and look at our daily range. You have $5 days, $8 days, $7 days, $3 days. So all those add up and give you wide ranges, right? So your average true range, your ATR, if you're not plotting that, I don't use it to trade, but I use it to tell me how to gauge my stop. Is my stop too tight? So maybe we haven't talked enough about that, but it's really, really critical that you think about your stop, right? Logical area is this gap. That's the logical area. But if you say I want to be tight, then tight means at least you take into account the range, the daily range, the average daily range for that particular ticker. Then you don't get stopped out, right? So if your stop is here, your 2x is still far away, but you're not stopped out, you're in the trade. And when we come up here to this supply zone up here, when we get to the supply zone, you can say, you know what, I can exit, even though I didn't get my 2x. That's perfectly fine, right? So really, I just want to keep honing in on this conversation of stops. Right? Tight stops are not healthy for you. they make you give up too quickly. Especially when you see, okay, we're having higher highs, higher lows, but this day, Tuesday, it started with a gap up, it gap down first. So it closed this gap, and then it wants to use this previous supply zone as support. So just give it some wiggle.
Yeah.
Yeah. Was that the
Yeah,
only
this is
trade you
definitely.
took though?
Yeah, this is the only trade I took. I saw something that was interesting on SPY, but nothing that it was, it wouldn't fit some of our criterias. So I think I decided to just hold back. Um, um, so I was just kind of watching SPY and how it's moved. It kind of broke out of that, consolidation zone it had built over the past couple of days, past week. And so I'm going to let this develop a little bit more because I think our plan was, hey, if it blows through that um, supply zone and then tests it again and comes back, then we take it to the upside. So
That's a good
um,
student right there. That's exactly what we talk about, right?
yeah,
This is what
so
we want to see,
yep,
and we're
exactly,
still inside here, right? I actually like
yeah,
your thought process on this one because you said, hey, I'm inside the supply zone. I don't know what is going to happen, so I'm going to skip it.
yeah,
Remember, write that down. That's part of your journal because a no trade is a
mm-hmm.
win, right? An intentional no trade. You thought
Mm-hmm.
about it. You didn't take the trade because of X Y Z. That's part of your journal. But
Yeah,
I like how you thought about it. It's really amazing. So uh, again with the cues, I think you had the right idea. It tested it as supply zone as support. Yes, you said this hammer, the spin bar is my test. You took that trade, fine. Here down here, it gave you actually a better entry with a consolidation, right? One of our
mm-hmm.
criteria, if you don't get a hammer, it's railroad tracks or consolidation. It gave you this consolidation, which you say, hey, when I break out of this consolidation, I enter. It gave you a little bit better entry, right? A $2 entry advantage. So you can even add to your position when you see something like this instead of
Mm-hmm.
having a very tight stop. And now this, then you keep riding it to the upside. When you add to your position here, remember I said use the 510 from this entry
Mm-hmm.
somewhere here. So
Yeah,
even for this one, even though it's not 510, you can keep the same, like because you're adding to that position. You're saying,
mm-hmm.
hey, my stop is here. I don't want to keep pushing my stop further, right? I want a tight stop. I'm adding to the position because I believe it's just gave me a better entry. Keep the original tight spot stop.
Mm-hmm.
Because if you're wrong, you're on double position now, so you want to get out quicker instead of widening your stop. But that would have made sense, and then we still be in the trade because it's still to the upside, and until we have some catalyst that drives it one way or another. Uh, so this, I think this zigzag that we drew, I believe is still intact because we tested it here, but then we could still have a higher low, and then we go back up again to test this supply zone, right? So we can even enter more this consolidation zone. If I break above this consolidation zone tomorrow when the market open, I can enter. But my target would be, I'm not gonna get the 2x. I'm not gonna
Mm-hmm.
get the 2x. However, if I say this is where I want to take the position, my stop is, it makes sense like this area here. Now for this entry, this area makes sense, right? It's the next logical area, the previous swing low.
Yeah.
Just give it a little bit of a wiggle room from there, and then you can say, you know if I take this as soon as it touches, it's a 0.41 risk reward ratio. Do I want to take it? You make that decision. That's fine. Or you say, you know what, it could go slightly higher, and if I'm gonna try to get a 1-to-1 at least, and then take the trade, or you skip the trade because you say it's not enough room for me, right? All of those become valid, but important for you to consider. Make sense?
Yeah, it does.
Okay. What else did
Quick
you look
question.
at? Yeah.
How do you, so when you kind of pick your price targets, is that based off of kind of like the expected move using your extensions, or how would you go about picking that, especially as you get closer and closer um, to a demand zone when you enter a trade? Would you
Yeah.
use your take profit um, target as kind of your call, or in this case? Yeah.
Yeah. So remember, we have the fib 23.6% retracement down here.
Mhm.
Like for
Yeah.
me, like sometimes I just don't even take the trades. And the exit for this trade, if we say green to green is my buying zone, and
Mhm.
if I get a pullback to green zone, my exit is outside of the supply zone, right? And
Mhm.
that's not a realistic expectation when I have a supply zone ahead of me. When I know there's a headwind, I'll say, okay, can I, if I get a good entry, like this green to green entry, am I okay to exit as soon as it touches supply zone? And
Yeah.
if a bar goes and the high of that bar touches the supply zone and it fails to go push higher, or the next
Mhm.
bar pushes lower, I'm just going to exit that position. Excuse me. And
Okay.
so uh, I have targets based on the fib. I have, like, whether it's an extension or retracement, I have targets.
Mhm.
But then in collaboration with my 2x, in collaboration with supply zone, demand zone, I make a decision. Right? And that's why I don't like these uh, late entries here. Like this one I
Mhm.
like because we tested it and it gave me enough room, right? So uh, from even from your original entry, right, to this, there's an $8 move, right? It's better than 1x
Mhm.
because our stop is $5, right? So it's better than 1x. It's not quite 2x, but at least it's giving you uh, that opportunity. And if you do it from the the new entry, even better, right? Even
Mhm.
better because you have an $11 move. So where is
Got it.
my headwind, and where is that headwind in relation to my expected targets? Whether it's 2x target, whether it's a fib extension or fib retracement,
Mhm.
extension of that fib retracement. Whichever the case, do I have enough room for me to take the risk?
Mhm.
When you say
Okay.
yes, you pull the trigger. Yeah.
Okay. Sounds good.
Yeah. We have this big gap down here that, we haven't filled yet. So, and this
Yeah.
dash lines are this long
Mhm.
term monthly, right? So monthly is almost back up to the top, right? And so we're
Mhm.
clearing the 23.6 in the Qs. And the spies, we also cleared that. The spies did better in terms of the pullback, right? They never went back to the 61.8.
Yeah.
Much, much better. And the recovery is at about the same place. The
Mhm.
recovery is not as fast, but they didn't pull back so far, right? So the spies are still okay to recover and be in the same area, right? Claiming back that 23.6. This is fine.
Yeah.
So it's quite interesting, right? How it's playing out. But, we have yet to see what is going to happen in this supply zone. If there's some capitulation that was going to take place, like some major news that drives it down, or the Feds decide they want to keep increasing rates because they can't control inflation, then the market might go into a panic mode. If you look at time, how long it took from this high to this low. So if we do it this way, it's 43 bars. Like it's a daily bar, so it's 43 trading days for it to go from high to low. So if you project that for another 43 days, we're middle of July. And maybe even closer to end of July because we're counting trading days. Yeah. So nothing is impossible, but you have to just keep looking at it, right? So where are we in relation to our positions? So this downside has now, remember, we didn't capture the 78.6 for this down move. For this down move, we kept going up. Now we have completely claimed it. I mean, we went above, tested it. I mean, slightly below, it's okay, and then we've completely claimed it, right? So I don't need this. This tells me nothing. Now this is the latest, but this latest keeps driving price up. We have this sideways movement. So if you look at this, we close below 38.2, so you can say I want to move this here, and then it keeps doing that, and then now you are up here. Let's just try this one. What happened to this one here? So this one closed, right? So that's why. And then we're somewhere up here, but there's no real anchor to draw from, so we just wait. But for this position, like green to green, this pullback, you can trade daily charts, hourly charts with this fib, right? So if you go green to green, we came down here, we formed this shooting star. I don't know when it's at the bottom. I keep mixing up their names, right? So there's abandoned baby. Yeah, I don't know, but anyway, when you have a lonely bar down here, you can say, okay, we broke above it. I want to take this entry, and for this fib, your first exit is up here. We hit first exit, we hit second exit, we've almost tagged third exit. So these trades are there, right? They're always there for whoever is willing to take that trade. Right? And on a daily, it showed you this lonely bar here, right? At this bottom here. But if you look at this consolidation, I break above that consolidation, I take this trade. I'm in my green to green zone. This is my sweet spot. I just broke a consolidation. Boom, I take this trade. And where do I place my stop? Logical area, like this green to green. So I can go close to this bottom because now it's green to green, or I can say I want to go here somewhere below this area, like closing this gap. And then where's my 2x? Look where this is. This is almost like a 4x move. Because we trade what we see, right? It's there for you all the time. Now here, when we were talking about this a couple of weeks ago, we were not so sure about how the markets were doing, but this was one of those entries that we said we should take this entry. So this all play out, and but now that we're up here, we're more cautious, right? We took a trade here, we're more cautious here. This trade here is now the next fib is down here. it closed below, but we don't have the next anchor. Really, I mean, you can say we do have it because it's on an hourly, looks like a pullback, but until it breaks at 23.6, I don't really think it's a deep
Mm.
enough pullback. So I just wait. This is a matter of preference, right? Whatever you want to put it. Like if I put
Mm.
it up here, I keep in mind this is really not where I want to put it. It's here because I want to draw from here. Actually, this is where I want to draw from, but I don't have a pullback to draw from here.
Yeah.
Okay. What tickers do we want to look at outside of spies and Qs?
Um, some of the small caps have been doing really good. I don't know if you remember Upstart. Um, they had that pretty funny interview with that hedge fund manager last summer when it ran up something like a couple 100%. So they had a good couple days. Still down significantly from their all-time high, but um, having
Yeah, this
a
was
couple.
all meme stock driven, right?
Yeah, yeah,
This
exactly.
and this is more like where it should be.
Yes, but I
So,
saw
but
that
it
they
was
had
yeah.
yeah, that trend line. It's been holding that trend line right there. If you zoom in a little bit more, every time it touches that trend line, it bounces off that.
This one you
Um,
mean?
yeah, or that one right there. So I've just been paying attention to it. Because it had a good day today. As soon as it tested that trend line, it had a 10% day. So um,
Yeah,
I know
on
it's
a
not that
daily.
bad.
But this is
Yeah,
good, right? A 10% move in one day is significant.
yeah,
So it had a chance here, it had a chance here. So it's right. I'm glad you start to see trends forming.
yeah.
Yeah,
And I know it's not um, the only method, but I
yeah,
figured, hey, if it works, right? So you have to respect the trend line.
yeah. But we've talked about this, right? In our basic training, we did the zigzags, and then it was support resistance. Support resistance is not always horizontal, right? Sometimes it's diagonal. Yeah,
Exactly.
yeah. And then you combine that with with your fib, because your fib really gives you a lot of good confirmation.
Yeah.
Like when it touches here, it's green to green.
Hmm.
Boom, you take it. And then the next one, because it closed below the 38.2, when it touches, so here, this one, when it touches, almost touches here,
Hmm.
it's green to green, right?
Yeah.
This work, we're going backwards, but I'm sure you how these things work. When it touches
Yeah.
here, it's green to green. That's why I
Hmm.
love green to green. Like, I'm not saying 23.6 doesn't work, but I have
Yeah.
better success rate because I get better entry here.
Yeah. That's beautiful, actually. I didn't even um, draw the fib on this one. I was just kind of watching the trend line, but it
Yeah,
works beautifully.
yeah, it confirms it for you, right? When you
Yeah.
draw the trend line, it gives you a confirmation.
Hmm.
And when you come close enough to it, you don't have to touch it. You just say, okay, I'm taking this one. I'm taking this one.
Hmm.
This is like last couple of weeks. This has been very good tradable stock.
Yeah.
Yeah.
Um, yeah, this is one of them. Another good one. I was kind of just waiting to see what happens with Apple. They after they unveiled their new I can't even remember the name. The
Yeah.
HoloLens AR. Yeah,
Yeah, I
it
think
kind
there was a lot of hype before the announcement, and then
yeah.
as soon as they gave the price point, somebody decided I'm going to use that as an excuse to get me a better entry. That's what I
Yeah,
believe happened. Like this is just for an entry excuse.
yeah.
and then when the rest of the market goes up, because we're at an all-time high, right? Right
Mm-hmm.
before the announcement, we tagged all-time high, and
Yeah.
now, we just have a short pullback. That's all right. I mean, this is not a big deal.
Mm-hmm.
What happened? Oh, I did text here. How did I do text here?
Mm-hmm.
I might have accidentally clicked the T there. Okay. So nothing, 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 right? So where is this? Green to green. Green to green.
Mm-hmm.
And if you can say these almost railroad tracks, is your entry with a stop below the 61.8. And you can target. So here's your entry. Here's somewhere here. Even if you target the previous high, you're very close to a 2x.
Mm-hmm. Yeah.
Yeah. What is our friend
Yeah.
doing? AI.
AI is it's slowly making its way back after just a catastrophic few days.
I don't think it was catastrophic. I'll tell you why. You have to really put things in context. So before earning, we had this gap. What did we do? We closed the gap. That's all we did.
Mm-hmm.
And if it was catastrophic, it was if it was like 2 3 times market maker move. Yes. Remember the market maker move was, I believe we said right before earning, we said about $13. And so
Mm-hmm.
from the close of 40 to the low of the next day, the low of the next day, 34.58, we didn't even do 1x. That's why I said it's
Mm-hmm.
not a catastrophic move. If
Hmm.
we had done, the market maker move, or more than that, I would say if we had come to test some of these levels down here, we would say, oh wow, this is danger, right? Then we go down. I think what
Hmm.
happened is we don't see it. Like, I can't see it right now. I'm trying to force myself to see it. Like, this is like a demand zone.
Mm-hmm.
Uh, I'm not seeing it, right? So just I'm just gonna be transparent, like, because this, I don't see this as consolidation because it's moving slightly to the upside, but I think this was a demand zone.
Hmm.
Because this was a demand zone, what did they do? They came back once, they came back twice, and anybody who said I am below this gap, I'm taking it to the downside, they say, oh, you want to take it to the downside? You know what? We're gonna stop you out first, and then we're gonna pretend we're gonna go to the downside. So the next set of people went to the downside. Ah, okay, you want the downside? Okay, we're gonna take out your stop first. And by the way, the people that have said, hey, when this almost like a hammer was formed, went to the upside, this is where they said we're also gonna collect your stops. This is the manipulation, right? In 2 days, sometimes it's one day, like 2 3 hours, you can see all the manipulation done and price moves in the direction it wants to move. But here
Mm-hmm.
they said, okay, first people that went to the downside, we're gonna grab some bulls because we're coming back inside the gap. So they said, okay, by grabbing these bulls, we take care of this stop. And these bulls,
Mm-hmm.
by pretending they're gonna go up, but nope, we have only closed half the gap. We're gonna come back down. And the second time you're down, people will say, "Oh yeah, this is the time." Now they really just went for half the gap and they're gonna go down. Then bears added or went new position here. and they say, oh, by the way, nope, that's not it. We've taken care of these bulls around here. We stopped them out, and then these bears are already taken care of here, and these bears they'll say, oh, we'll take care of them here. I say all of this because the move was not 1x. It was
Mm.
less than that. So that's why I say, okay, not catastrophic move. And
Mm.
I want you to compare it to this. Same exact thing happened in terms
Mm.
of we gapped down after earning, but then we were going back up.
Wow. Yeah.
Right? So I saw this, and because I saw that, I was not afraid of this move.
Mm.
I actually took a position because of this.
Mm.
Like, okay, yes, I didn't get my 16, but this thing is gonna go. So, you know, sometimes we have to accept that it, it you know, we're not gonna always get near the bottom, right? 11 would have been
Mm.
great, 16 great, but even 40, I'm okay because 80 to 160 is my so long. I'm not trading this, right? This is not a trade for me. This is for
Mm.
me. It's a long term AI play, right? So as a long
Yeah.
term AI play, I hold this position knowing that my exit is at least 80.
Mm.
Then you're okay to get into this position. You're okay to get into this position. Okay, we straightened out one. Let's straighten out this guy. I don't know how I drew it. Like, uh, almost, I think, straightened out. Close enough. All right, so that's why when you think of catastrophic move, look uh, at the money options right before earning. That's the expected move,
Mm.
and from there, did we make that move?
Mm.
Nvidia went outside that move to the upside.
Yeah. That was a once a year kind of once in a long time kind of trade. If anybody took a at the money calls, they definitely got paid.
I don't know how much they got paid because they were very, very expensive.
Oh, really?
Especially if you buy it right before earning, it's pretty pricey because
Yeah,
volatility is
people were
very
saying,
high.
yeah. I saw some people saying though because they took it the Friday before um, earnings,
Yeah,
and
this Friday before is was cheaper than buying it on Wednesday before earning.
yeah, and I think
Yeah,
the expected move was something like $10 or $20, and so the some people that posted their 380 calls, they bought it for like 30 cents or something, and the next day it was worth $30. So it was pretty dramatic shift.
so I don't like to tell people to take that kind of trade because
Yeah,
that's a gamble,
definitely.
right? It's definitely
Yeah,
a gamble. When price is at
yeah,
310, you buy the 380. That 380 expiring on Friday, I don't think it was worth $30, right? The 380 because we the highest we got was 390. So it would be worth maybe about $10 or $15. So irrespective of that, right? This the when the move is 20, 2x move is 40, so 10 plus 40 is 50. Now you're saying I'm going to expect significantly more than that, and because it's 30 cents, I take a risk. What these people don't show you is how many of these stupid trades they took and lost their accounts on, and this one time they made it, but they still haven't recovered all their losses.
Yeah.
All right, so you really have to consider that. Lots of people wipe out their accounts taking stupid trades like this.
Mm-hmm.
I say it's really stupid trade because unless you have an insider information,
Mm-hmm.
and even that, you're not guaranteed that it's going to make a move like this. You might know there's an upside surprise. That's all you will know. And
Yeah.
it's the market that decides how far they want to drive.
Mm-hmm.
Yeah,
That's very true. Yeah.
yeah. So I would say, if you expect the move to be slightly better than the market maker move, just go right outside it, right? So if the move was $20, so that's 330, you can buy the 330, the 335 call. Even if with that you're still gambling.
Mm-hmm.
Earnings trade for me is strictly gamble. Is if you've made enough money and you have some that you want to throw away, that's fine.
Mm-hmm.
I don't like to give back my money. Once it's in my account,
Yeah.
it's my money.
That's very true.
Yeah.
Yeah, I mean, this is no one would have. I mean, you're definitely right. This is 100% gamble, and you happen to get lucky with a trick shot once in a while, but most likely, most of the time, you're losing. So,
Yeah, it's not sustainable.
yeah.
Yeah, it's not sustainable. What's sustainable is if you want to take a risk and less of a gamble. At
Mhm.
310, you sell the 310 put. The reason why it's sustainable is I believe in Nvidia. It's gonna go up even if the earnings tank. I don't care. I want to own Nvidia at 310. You're okay owning it at 310. So the 310 options could be worth $7, right? So your entry is really 303. So even if it goes to 280, your entry is at 303. You're happy owning Nvidia at 303. You pull the trigger. At that time, it's not a gamble. That time, what you're saying is, if it goes down, I want to own it. If it goes up, I'm just gonna make my $700 per contract, and I'm good with it.
Mhm.
That's how I think about earnings plays. If I really
Mhm.
want a particular stock, that's how I play it for earnings.
Mhm.
If you collect 700 and say, you know what, if there's upside, I want to make some money, then you can maybe give back uh, $1 out of that somewhere up here.
Mhm.
You're still positive, right? You're still positive $6,
Mhm.
something like that. But to say I'm gonna put 10K for 30 cents option, and if you lose, you lose 10K.
Yeah.
There's no forgiveness. That option goes to zero quick. You don't even have time to blink. But I really
Yeah,
want to
definitely.
emphasize this because I don't want you to see those traits and get into that kind of a habit. It's not a healthy habit.
Yeah.
Yeah.
Yeah, I definitely agree.
Okay. All right. Are we good for today?
I think so. Yeah.
We're still waiting to see what happens with the Qs because we're near supply zone. Spies inside supply zone, so we want it to decide what it wants to do. If it breaks above it or it breaks below it. So to the downside, let's just draw it here. If it breaks below it and tests it and goes
Mhm.
down, we can consider targeting this gap.
Mhm.
Right now, this is counter trade, which I don't want you to do, right? Because we have cleared the 78.6.
Mhm.
If we were below 78.6, I would say, yeah, there's a one side that says it's bearish and we were bullish for a short time. Now
Mhm.
there's no indication on my side that says we're bearish. So I don't want you to take this counter trade, but you can say this prepares me when we get down here. I take a bullish trade.
Yeah.
right? So no counter trade, but this gives you preparation.
Cool question on that one.
Yeah.
What if on the spies? What if it just tests the bottom of that supply zone and then starts reversing? What would you still wait until it clears that supply zone?
Yeah, to me that it's not clear yet, right? Because it's a zone, right? It's not a single point, it's a zone. It's not clear
Yeah.
yet. So uh, you if you want to take a chance, you can take a chance.
Mm,
And if you do that, I would say a smaller position size.
yeah.
But stops, remember, stops are critical. And so your
Mm,
stop, where is the next logical stop? You have two areas where you have a logical stop if you enter here. This here, right? This swing here, or this here, which is the entry that I'm expecting. But this is a big stop, right? And so I don't want you to enter a trade and make the stop here to make the stop smaller.
okay.
Got it?
I was thinking the bottom of that big bar, um, a little higher, kind of at the top, I should say, the top of that one, yeah, that bar right there, because it acted as resistance, now turned support. Um,
Yeah, I don't
so,
use bar to bar support like that. This again, this you're getting into a very tight stop here.
mm,
No
okay.
wiggle room. Right? Even this one scares me.
Mm,
But if you do this one, you must be absolutely convinced I have given it enough wiggle room, and not say, "Oh, if I don't do this, I can only buy one share. Therefore, I want to do this so I can buy 10 shares." I don't want you to think that way.
mm,
If this only
okay.
gives you one share, you just do one share, right? Like by doing this. If by doing this you can only do one share, you do one share. I don't want you to do more shares because you can move your stop up here.
Mm, okay.
Yeah.
Yeah. Sounds good.
All right. I think we're good for today.